All right, back to work. Back to work. Break time is over. FOMC is behind us. The Fed has spoken. Now we get a lot to look forward to on Reaction Thursday. Boy, markets made these big moves down this afternoon. Listen, anytime we see big moves like we saw today, there are three very easy, very simple trades I'm tracking for tomorrow. And if you watch the entire video tonight, I'll throw in a bonus fourth trade I'm tracking as well. I've got three easy trades. And if we're lucky, we'll get that fourth bonus set up for tomorrow. You know how we do it in these videos. I'm going to cover my favorite trades. I'll cover all the details in the video tonight. Then we have a game plan to make some money tomorrow. Before we jump in, though, and get our hands dirty on these charts, I'm getting excited just thinking about it right now. Reaction Thursday. Before we jump in, though, make sure you subscribe to our channel that we don't miss tomorrow night's video. And if you guys like these lessons, if you like these video lessons, do me a favor here tonight, will you? Hit that like button for me. Give me a holler. Give me a shout out down in the comment section below. Either way, though, thank you so much for carving some time out here in the channel. Thank you so much for tuning in. But let's get the intro out of the way. Let's get into the lesson here tonight. Thirsty Thursday, Reaction Thursday, one of my favorite days to trade. So let's get into it. Starting off tonight on the 60-minute chart, the NASDAQ and the Qs, the 60-minute here on the E-mini and the SPY. I like to use the 60-minute time frames to help me plan my trades for the following day. And then later on in the video tonight, we'll drill down to some tick charts. Tick charts are so much easier to time the perfect entry. So we'll drill down. We'll talk entry tactics as the video gets deeper here for tonight. What are the 60-minute charts telling us right now? They're really telling us two important things. One, I think everybody knows we're bearish right now, right? There's no doubt about that. But the big clue here is the simple sheer size of the moves that we saw here this afternoon. Like I mentioned earlier, anytime we see really big moves like this, there are three really easy trades we're tracking for tomorrow. I'm going to go over those here in a moment. And if we're lucky, we'll get that fourth bonus trade setting up here at some point tomorrow morning in our trade room. So we're going to cover all that. Now, before we dive in, though, and talk about entry tactics here for tomorrow, let's just double check the schedule for tomorrow, because tomorrow is shaping up to be a pretty busy day. There are four things I have on my radar here for tomorrow. Now, one of the wild cards in the pre-market tomorrow is we're going to hear from the Bank of England, the BOE. Just like the Fed, the FOMC announced their rate pause, or rate hike pause, I guess you would say, this afternoon. We're going to hear from the Bank of England, right, tomorrow morning before the markets open up here in the U.S. I think everybody expects them to pause as well, but if they surprise people, that may shock the markets a bit in the pre-market. Something we're watching tomorrow morning before we start trading the trade room tomorrow morning. Then two news events tomorrow. One is the Philly Fed Manufacturing Index. That is arguably the most important news that we know about for tomorrow. And the second one is the home sales number. Now, if you watch these videos, if you're a student of mine, you know that anytime we see big red star news at 10 o'clock Eastern time, it has the potential to move these markets. We call this the 10 o'clock shock whenever we have a big red star news event at 10 o'clock Eastern time. So if I had to guess tomorrow, I would guess that 10 o'clock to 10:30 block be a pretty good time to be at your desk and paying attention. And the final thing is tomorrow is reaction day, right? All the big money traders, they've been sitting the sidelines this afternoon, and they're going to come back to work tomorrow. Reaction Thursday has potential to be a very busy, volatile day. So we're going to tackle this tomorrow morning in our trade room. So be aware of that. The Bank of England overnight, the Philly Fed at 8:30, the home sales number at 10 o'clock shock. And we'll see how crazy, how wild the day gets tomorrow on Reaction Thursday. Now, back to our charts, though, because it's good to know when the news is, but, you know, the money is made on the charts. Let's now go over my favorite trades here for tomorrow. That way you guys have a roadmap to make some cashola on Thirsty Thursday, Reaction Thursday. Let's grab a look here at the SPY and the E-mini first, and we'll wrap tonight up here on the NASDAQ and the QQQs. They are very similar, as you can see, so this is pretty much interchangeable. Again, as I mentioned in the introduction, we have a bear market overall right now, but the biggest clue is the size of that move down. Let's go into our tick charts here now. The tick charts, as I mentioned earlier, tick charts, they're just so much easier to trade off of tick charts. This is a 7,000 tick chart. We use tick charts exclusively in our trade room. This is the 21 EMA, by the way, if you're watching here for the first time. Not the only indicator we use, but it's by far the most important, most important clue right now is the sheer size of that move down. Anytime we see a big, strong move like this, we're expecting a deep two-legged pullback, a retest of that low, and potentially a double bottom bounce off of that low. Anytime we see a strong, big move in one direction, I'm expecting to see a two-legged pullback, a retest of that low, and potentially a nice strong bounce off of that low. Okay, so three very simple, very easy ways to trade this is to pick the bottom and get in on the bounce. Not always easy. We'll talk about that. That's kind of an advanced tactic we'll talk about. How to short the pullback. I got a couple easy setups to track for tomorrow to short the pullback. And one of my favorite trades is that double bottom reversal. Oftentimes, it's one of the easiest trades you'll get here of the week after a big move down like that. And again, that'll cover three of them. Later in the video tonight on the NASDAQ chart, I'll talk about that fourth bonus trade, which we could only be so lucky if we get that setting up here for tomorrow. So one, two, three. Let's break this down and talk about how to make all this work right now. Now let's talk about the pullback. All right. Right now the market's pretty bearish, and there is no reason why this thing can't keep going lower. All right. There's no reason why this thing can't keep going lower. The market is never due for a pullback. So I got to be careful trying to pick a bottom on this. You probably know how easy it is to lose money picking tops and bottoms. So in my experience, the best way to pick a bottom on this, when you have all this bearish momentum, is to wait for rookies to get in down here, right? Rookie sellers. And when they start chasing this thing lower, use their stops, trap them in, and buy into their stop losses. So instead of simply trying to pick the bottom on this, my favorite way to kind of pick a bottom, if you will, is to wait for rookies to come in and let them get short a little bit here. And once they get short, remember, this would not be a very good place to be selling. Right? You're selling pretty low. So we have to assume that these are rookie traders who are getting short right here, tight stops, small accounts. If I can get these bears coming in and trying twice, I'd like to use what I call a crown reversal pattern going higher. Okay, it's a very simple pattern. It's a higher high in price and a trap below that low. If you're taking my free classes right now, this wraps together a failure and a bear trap pattern. If you guys are in the free course right now, right, it wraps together what's called a failure pattern, a two-try failure, and a bear trap below that low. All right, now this may take a bit different form here. It may be like this. It may go up like that, right? It may be a bit sharper, but the bottom line is that is my favorite. It's the safest way to pick the bottom. Right? Again, higher high in price, trap below that low. And in that free video course I mentioned earlier, it'll talk about the entry signal candle that you'll need, right? You know that. I call them crown reversals. Now, one thing about these crown reversals, these are counter trend trades. So they're going to be half size position. They're quarter size position, right? We don't want to, sometimes we try a couple of these before we get one to work. All right? So half size position, quarter size position. If you're brand new to this stuff, it might be a zero size position, right? Until you kind of get your feet wet with these setups. But that's the way you want to look for it, right? As it pulls back. Now, let's talk about, as it pulls back now, how to short on the way back down again. Okay? I mentioned earlier a two-legged pullback. Okay? Now, in the free video class, in the free trading course, I talk about what are called measured moves. Okay, measured moves are basically ABCD patterns, right? ABCD, one leg and two leg. If you understand the idea behind a measured move or an ABCD, it'll usually go a little bit further than a 100%. All right, so we don't know enough about right now. We don't know the whole thing right now, but again, once we get above the moving average and we know the size of the first leg, we'll then go, okay, that leg right there, there's 100%, right, extension. It'll be a little bit above that. Usually these two-legged pullbacks, the best ones, they'll go right above a prior swing. Okay, so again, unfortunately, I can't read the future that much right now, but I know the basic fundamentals of what I want. It'll be a two-legged pullback, and again, the best ones will be just a little bit above, right, a prior swing. Now, at this point, we're hoping the buyers start to think this is a reversal. Okay, and it might be a reversal, and we'll talk about that here in a second. But usually they aren't. Usually after a big move down like that, this is simply a bull trap and waiting to go back to retest the low. How do we enter on this? Inside the free trading course, we talk about two patterns. One is called a failure, as the buyers come in and the buyers sort of get long off the moving average, right? That failure, use those stops as fuel on the failure and the pullback combination. All right. Now, if you're watching for the first time right now, this may not make a lot of sense here. But as we go higher, I want to rope those buyers in, right? Rope those buyers in. Let those buyers commit. And then think about where their stops are, right? When we get above the moving average, buyers commit. Think of where their stops are, right? Run right back down below. I can use those stops as fuel for a failure pattern. Right? Then as I roll over now, everybody wants that first pullback off the moving average. We go above the moving average. Buyers try, they fail, they go lower, they pull back and blast. Failure into pullback combination. Failure into pullback combination. Again, the goal is to go back down to retest that low. Now again, if you're watching for the first time right now, this may sound like a foreign language, but not to worry. I cover all the details and I have hundreds of examples of these setups inside of my free trading courses. I'll put a link up top there for you. Grab that link, take that free trading course, because the strategy that you'll learn in that short video series will teach you a stupidly simple trick that we use every morning in our members trade room to know exactly where the best winning trades are going to be that day. And on top of that, I'll teach you my 4 favorite entry patterns to help kickstart you making money on your own. Things like traps, crown reversals, failure, pullback combos. If you're tired of missing the best trades right now, hit that link. That roadmap will get you on the meat in your trading right now. And also be aware too, if you can't grab that pop-up link, I'll put all the important links I talk about tonight down in the description of the video. All right, so just be aware that all the extra stuff will be down in the description. Okay, so now we get a pretty good plan of attack, right? Now we know it's the crown reversal off the low. It's the two-legged pullback, which again, we don't know exactly what it'll be right now, but we know roughly about where it'll be, hopefully above a prior swing. We know this thing will get around the moving average. The buyers will probably come in and try. Now, what if they're successful? What if they hold that pullback? Well, that will be a reversal, and we'll talk about that in a moment, because tomorrow's reaction day. Doesn't seem likely right now, but is it impossible for a full? Of course it's possible. I want to make sure you guys have a game plan for that failure into pullback back down to that low. Okay, 2 out of the 3. Now we get the pullback. We run back down to that low. One of my favorite trades is to trap in rookies off of this low. Okay, in this scenario, the wise professional traders are getting in wisely off the low, right? Not picking bottoms, but again, trapping bears in and getting that fuel going higher. They're also selling the bounce. They shorten the bounce as we go. Now, think about what happens at this low. At this point now, all the rookies who got fooled into getting long got stopped out. What's going to happen? When I was a rookie trader, I would always get fooled, right, into thinking it was reversal. And then once the market rolled over, I'd go, oh, now we're bearish. Now I'm going to sell. Now I'm going to get in, right? And this little okie doke probably cost me over $10,000, right, in the first few years of my career. This is why trading is so difficult when you're brand new, right? You think it's a reversal. Oh, I got trapped. Oh, it's not. Oh, shoot, I'm trapped again. Well, this is where we can trap in more rookies. Remember, rookies make for good cannon fodder for experienced professional traders. So as we go back to retest that low now, these are not professionals down here, right? These are not experienced traders selling down here. All the pros who sold that bounce, they're taking their profit off down here, right? They're getting out of their positions, at least a big chunk of it. Now, once those rookies come in and they start getting short, what I'll look to do is trap those bears in. Okay, in our free trading classes and in our trade room, we talk a lot about what we call the 2-try rule. Right? Human beings love to try things twice before they reverse and go in the opposite direction, right? It's kind of built into the DNA of the market. And so once those bears, rookie bears, we assume, try twice here, now we know exactly where their pain is. I know it sounds bad, but this is the easiest, in my experience, easiest way to make money is to trap those bears in at a horrible place to be selling and use that 2-try failure. And oftentimes what happens is, this 2-try failure will jump really high like that, the target is back to that high. Okay, that's my target in the short term, right? That's my target. What I want to do is use usually it's a trap entry. It might be a pullback entry, right? But a trap entry as we go higher. Okay, that moving average comes over. Oftentimes we'll find a channel off these highs, off that low, and look for the entry right there. Okay, so again, it's that crown reversal off the low, right? Don't pick the bottom, trap the bottom in, right? Trap it, use stops. We pop up, we trap the buyers in, back down again. We take the bulk of the position off right at that low, and then we start seeing rookies come in. And once those rookies commit, right, we pretty much know we got them boxed in at that low, that failure into that first pullback. My favorite is a trap, and again, I got a lot of examples of those inside of the free trading course. Now, I want to go over some variations of this. All right, I want to go over some variations of this. A couple of variations. First of all, this two-legged pullback might turn to be very sharp. Okay, it may be very, very sharp. There's a lot of times where we'll see these bears will get trapped in, right? They get trapped in the crown reversal, and it's very, very sharp. Okay, if this really accelerates, okay, it's not going to be a bull market until they hold the pullback and continue. Okay, this is very, very important. Okay, if it accelerates and goes higher, it's just a strong pullback in a bear trend. If they hold the pullback and keep it going, that is a reversal. Now, why would I say that? Well, because a lot of times these big moves down, they produce big bounces, right, off those lows. And so sometimes these bounces are so strong, there's a lot more buyers now trying to push this thing higher. Okay, why do I say that? Well, because in this case, this is where you want to use what I call a two-try failure. We talked about the two-try failure down here. Bears try once, bears try twice, higher highs, roping in the bears. That's the way you buy a bottom in a bear market. The same principle is in play here. If it really jumps off that low, again, you'll know it when you see it, right? It'll blast and rip going higher, and they may hold it and keep going. But if those buyers try once, if they try twice, see, remember, buyers want to buy low. Buyers want to buy low once, twice. Once they do, now we know where their stops are. Now we have something to roll over and trigger that move going lower. Again, two-try failure. If what? If it really blasts up off of that low. And then keep in mind too, if they hold that, right? If we end up getting that bear trap and it pops up and holds the moving average, right, and jumps, okay? We call these 1, 2, 3 reversals. All we do is mark that high, mark that low, find that swing, and grab that first test. Again, doesn't seem as likely for tomorrow, but I don't have a crystal ball. I have no idea what tomorrow brings. I only know what has happened in the past. So if they bounce and hold off that, again, they got to hold it. Right? Hold and jump. That will give us now, right, that first test off that channel. That could be a trap. That could be a failure pattern. Could be a pullback combination. Another variation of this would be like this. We trap the bears in. It blasts and it begins to grind. We always joke around by saying the pop and grind is our favorite dance move, right? The pop. I know, I always laugh when I say that. But remember, if it pops up and starts grinding, okay, that grind is a sign that all the bears have walked away. This is pretty easy. Mark off that high, mark off that low. That gives your channel. Do not, repeat after me, do not chase this thing higher. Okay, because what's happening is it's squeezing all the bears out, which causes it to run like that. Eventually, buyers will have to get in here, and they're going to want to buy where? At prior swings, usually around the low of that channel. And I'm going to keep it simple tonight. We're not going to go over all the details of the entry tactics right now, but it could be a trap pattern. I love traps. You guys know that. If you're a student of mine, you know I love traps. Traps, failures, right, underneath the moving average for a failure pattern, pullback combination pattern. A lot of examples of these inside of that free video series that I mentioned earlier. All right, guys? So that is what's on my mind here for tomorrow. Deep pullback, two-legged pullback, retest of that low. We've got 3 easy ways to participate in it, and again, a couple bonuses if for some reason, right, it just simply V bottoms and rips. Not likely, but we'd be foolish not to make sure we rehearse it. I've got one more scenario I want to go over right now, and I've been I've been neglecting the NASDAQ. I do apologize. I want to get the NASDAQ as soon as possible. Everything I talked about on the S&P can pretty much be applied to the NASDAQ and the triple Qs here. NASDAQ, same thing, right? We're bearish overall. The size of that leg is it's probably the most important clue we have on the chart. The NQ, same thing on a tick chart, 3,000 tick chart on the NQ. It's the exact same setup, right? It's the exact same setup. Big move down, two-legged pullback, trap the buyers in, back down to retest, trap the sellers in, right? And whoop, right back up again. That will usually create some big trading range in here, right, the following day. Now, let's talk about ranges, okay? The next variable is a trading range. Now, every once in a while, whenever we get these big moves down like this, nobody gets out, nobody takes profit, and nobody dares to buy it. And what happens is we wind up going sideways, right? We wind up going sideways in a trading range. These are one of my favorite types of markets because ranges act like magnets. So if we start chopping around here tomorrow, right? We start chopping around, and obviously I'm speculating right now, but I want to make sure you're ready for the potential for this setup. It's one of my favorite. My favorite type of market is a range bound market because it's very predictable, it's very manageable, and it's just, again, they act like magnets. If we go into a trading range, okay, my favorite trade on this, if you understand the idea of that deep two-legged pullback and a retest of that low, if you understand that basic principle that we talked about earlier on in the lesson, we oftentimes will get what we call a fake out breakout below it, right? So think about this now, new range, we break down, and remember, ranges act like magnets. And after all of this move going lower, there's a very good chance that rookies get sucked in here. The rookies start getting short, right? They're looking for what is usually a breakout pullback, right, off the underbelly of that trading range. Whenever we see a trading range, right, oftentimes it'll break down, pull back, and go, right? So it's a breakout pullback, right? Very simple, very common. But this is a very difficult place to look for a breakout pullback. Why? Because you're so darn low, right? After a big move like this, I mean, unless the Bank of England says we're all screwed, we're raising rates unless something really dramatically happens, right? There's a good chance professionals are not going to be open to selling down here unless something changes overnight, which could easily happen. We're going to keep our eyes open for news overnight from the BOE, the new home sales tomorrow. So I'm not saying it can't happen, but from what I know right now, all things equal, not a great spot to be a seller down here, right? So if I can get these bears to come in, right? If we can get these bears now coming in and trying to short that breakout pullback, I can now look for things like crown reversals, right, off of that low. I can also look for things like two try failures, depending on where, right, where the entry is. And I can look for, bottom line is, roping in those sellers. Again, we assume these are rookie traders down here, right? Chasing this thing, going lower, not seeing where they are in the big picture, right? Sometimes we get so sucked into the price action in front of us, we forget where we are, right? And we make mental mistakes, right? That's a very common, I made that mistake a lot when I was a new trader, right? You're so focused on the price action in front of you, trying to follow all your rules, you forget where you are in the big picture. Now, these types of trades are pretty easy because once you get that signal, again, two try failure, a crown reversal would be amazing in this scenario. Where's my target? My target is back to that high, okay? I will usually take about 3/4 of the trade off at that high, just because you know who's waiting up there, right? More bears, right? Bears. And then leave a final quarter, because of course we're counter trend in these scenarios, a final quarter, right, up to that we call the pendulum swing. So imagine the amount we go below the range, project that above the range, right? And that creates your kind of final quarter, right, if you will, right? A final quarter, final runner up around that pendulum swing. And of course, as you can imagine, right, once we find our way up into this area, right, bring in the rookies again, bring in the inexperienced traders now, who now once again will likely think this is a reversal. And sure enough, right, once we get, now think about this, right, this could easily be that two-legged pullback. It's usually I should walk that back. It's usually going to be the pendulum swing. Okay, that's the most accurate way to do it, right? But again, in that same idea of that deep pullback, once we get up, right, buyers come in. They're trying to force this thing going higher. Once they do, we know exactly where their pain is, failure into pullback combo. Remember, ranges love to rotate, right? Ranges love to rotate. They're going to rotate below, back up, below, back up. And so tomorrow we may end up buying low, selling high, buying low, and that may be how we finish up the week here this week. All right. So if we're lucky, we'll see a range down here. Makes our trades a whole lot easier. All right, guys? That is the game plan now here for tomorrow. I apologize for not spending more time on the NASDAQ, but again, it's almost interchangeable here on the S&P and the NASDAQ right now. What do you think about this? Am I crazy for the crown reversal? I would love to know your game plan. I would love to know what you love or hate or disagree with on these videos tonight. Don't hold back. I always look forward to hearing from you guys in the comment section below. Now, tomorrow morning, though, we're back together, 8 o'clock Eastern time, in our trade room. We trade this stuff together. You know the markets are going to be, they're going to throw a curveball at us tomorrow. I'm sure I missed something tonight, right? I'm pretty good at these by now, but I'm sure I missed something tonight. I'm sure something will surprise us tomorrow, but that's why we get together and we trade this stuff together. I can't think of any better way to learn this stuff than to come out and trade along with me every morning in our morning trade room. I'll put all the important links up at the free classes. Right? That's definitely where I would start. I would start with me on the free trading course. Get your feet wet, learn the basic strategy, get to know how we do things in our trade room, and that'll get you primed and ready to come out and trade with us and to have some fun with us in the morning trade room. If you have any questions or need help, please don't be a stranger. Megan and I are always here to help. So we're a small business, so you call the office, we pick up, right? So you want answers to questions, you want help, we're always here. We got live chat as well in the lower right-hand corner, so don't be a stranger. It's easier for us to kind of point you in the right direction for brokers or data or membership specials right now. All right, guys, I'm going to wrap things up here for now. Fantastic week so far this week. I know a lot of you guys have made some pretty good money in this FOMC week. Tomorrow, though, Reaction Thursday. Be there tomorrow morning. If not, we're going to come back tomorrow night. We'll do it again tomorrow night. We'll get ready for finally Friday. Guys, thanks for watching. Thanks for being here all the way to the end. You are the person I do these videos for. Now get some rest. Get a good night's sleep. I'll see you tomorrow morning. If not, same time, same place tomorrow night. As always, be well. Be nice to each other, will ya? And be here tomorrow. Adios, amigos. Bye-bye for now.